All right, so we want to document this price action right here. We spoke on how to look out for sales. We talked about how to anticipate and hold sell positions. But what happens when the market switches from sells to buys? This is what we want to talk about right here. So, as you guys can tell, as you are looking at right now, the market finally found the strongest demand that it could. Let me go ahead and extend this right here so it can look even better. This right here was where we were anticipating price to go, 43.75. I even told my students about 43.75 as we were anticipating this drop. All week the market was selling, right? So yesterday we said that demand targets around 43.75 would be the anticipated. So yesterday, we said that 43.75 would be the anticipated area where demand would be. Now, at the time when I made this analysis, I showed why 43.75 would be a very strong demand. As we can see, the way price bounced off of this area right here, this was a strong demand that they bought from in the past, which was the end of April, the end of March, beginning in April, and this really what took off over there. Now, all that I'm telling you is important because history repeats itself, and usually the market won't stop selling until it finds a strong demand to hold it together, right? It's almost like falling off a cliff and rolling and rolling and rolling and rolling until finally solid land at the bottom finds you, right? So how do you anticipate for price to buy once it finally makes it to a strong demand? First thing you want to do is once you come from the 4 hour structure, the 4 hour time frame, you got to drop down to the 1 hour time frame because price might have been selling off like this in Asia. But what you're looking for is the market to give you its usual sign of reversal. Price will reject or respect the low. Then we will have a break of structure. We will have price shifting the direction. And so, since we know price has shifted the direction, it's bound to return to the area where it came from because this is what the structure does, right? Break structure, come back to the point of interest. And so, you got to be waiting to catch them, retracing back into the point of interest to start positioning yourself in obviously your trades. And once it pulls back in, we're going to put our trade right there in our stop loss below the previous low that stopped the sell, right? Because if they're going to change direction, then the best place to put our stop loss is below when they made a hard stop and reversed it. So this morning, the best areas to enter this trade was right here, okay? Around New York, pre New York, even. And so, whenever price does come from a 4 hour structure with such volume like this, you best believe it's going to be a big price action jump once they make it there. They always do that. Look, when price made it here April 29th, they pushed out of there fast. Came back here again the first week of May, breaking retest out of there with large volumes. Boom, boom, boom. It's a lot of volume that comes from a 4 hour demand because they were waiting for price to make it there so they can skedaddle out of there. Okay, so you have to keep those things in mind so you can really take your time. All right, so when price does do that, that means you can expect whenever you get in that position, it's very best to hold that position for at least up to 4 hours. So 8 to 12, 9 to 1 p.m., right? 5 a.m. to 9 a.m. At least you have to give yourself that line of thinking to know how to go about the trade so you don't close out too soon. All right. So remember, 4 hour structure, when they've been selling for a while and they looking for the deepest, most cheapest demand they can find, then from there, you're going to expect this type of price action to buy. Okay. So that's how you anticipate a market that was going from, reaching into a 4 hour high and just sweeping it and start to sell, breaking retest, catching the setups in Asia, holding it for 12 hours, this, that, and the third. But one always starts asking, so what happens from here? What happens next when we finally make it to the demand that price was looking to find? And the answer is we're going to be looking for a 1 hour break and retest. And when they find it, and once they start to show you the signs of reversal, you best to take that trade once price gives you the retest back into the point of interest. All right. The area of interest. You're going to be looking for this sequence right here, a break of structure. That's number one. A return back into the area of interest. This is where you'll be entering your trades anywhere around those areas where price is pulling back in. Stop loss below where they shifted and expect at least 4 hour minimum up to 12 hours at least of price action to be getting out of there. And you will be in very, very good profit. Okay. So if you ever ask yourself what happens next and you missed out on this setup, you won't miss it next time. I promise you. Watch this video as many times as possible. Until next time.